What's up, everyone? In today's video, we're going to be covering some awesome predictions for the market for tomorrow and the rest of this week. For those of you who've been watching the channel, you guys know that we've been pretty bearish on the market over the past couple of weeks, and it just seems like every single day the market keeps making a new recent low. We have a lot more great setups in today's video, and even if the market hasn't been so kind to you lately, hopefully with some of the plays and setups in this video, hopefully we can change that. So make sure to stick with us. We have a lot of exciting things and important things to cover. But with that being said, Tom, let's jump right into today's episode.
Yeah, Mike, the market today was pretty rough to the downside, and I'll say I was pretty happy for this, honestly. So we were looking at the market over the past few days. There was a big event with the FOMC minutes, which we'll get into in a little while as well. But man, Mike, it's so good to see the market breaking that big 444 support. That was awesome. We were watching it the past few days, and even like 443.50 was pretty big. And in pre-market today, it was just so good to see us fall down. Now, we did pop back a little bit at open, but we bounced right off of that 444 resistance, which it was support, now is resistance for anybody who is new to support and resistance. That's kind of how they work. They flip-flop. It's good to see that hit there and us coming back down, and it created a bunch of opportunities on other stocks like SQQQ, SPXS, and UVXY all went insane today, and the FOMC minutes were part of it. But it's just good to see these red days continuing in, Mike. It's good downward selling pressure, and like I said, the opportunities out there are great. Now, I know the bears are going to be a little bit upset, but hey, that's why you got to be adaptable, and it's always good to take both sides. Like, I'm definitely still long for the longer term, but I'll take this short-term movement for sure.
There we go. So looking at like a daily chart of the S&P 500 or the NASDAQ or honestly any big tech stock lately, it's pretty obvious to see that August has been a little bit different than a lot of other months so far this year. And more specifically, it's been a lot more red, right? There's been a lot more I wouldn't necessarily say full-blown panic selling just yet, but there's been a lot more bearish momentum lately, and this should not be a surprise. We've been talking about how August tends to be a pretty bad month for the market, and more specifically, we have some awesome data to showcase showing the frequency of 1% down days and up days in the market. What we can see here is August isn't necessarily a great month for the markets, but also there tends to be a higher, frequency of there being 1% or greater down days in August compared to 1% or greater up days in August. So basically what that means is August is a type of month where, it's a lot easier to see like violent selling pressure than it is to see like, those rocket ship green candles. So keep that in mind going forward.
Yeah, and we've talked about August and September being historically two of the worst months in the market, and September's even worse. So I can't wait for that month to come ticking around, Mike. I'm a little bit worried here, especially with how this month's been going so far. Maybe we'll actually bounce down so much this month as September even goes green if we, fall down enough here. We still have like half the month to go. So I love that chart. It's one of my favorite ones to show right now because it really shows how August and September get those bad downward moves, and that's definitely something you don't want to see is moves like over 1% to the downside. Like that's never a good thing to see. And, the SPY today almost hit 1%. It was down 0.73%, but we go out to other big stocks in the market like Tesla, Nvidia, stocks like that. They were down like 3% plus in a lot of cases.
Exactly. And imagine when the market's down 3% plus. That's when you really get that nasty and violent selling pressure, because even if you look at the market intraday today, a lot of people would say, it was a pretty steep selling day, but honestly, it wasn't even that bad. Like you just said, Tom, the market was only down 0.73% today. So just imagine what the selling pressure looks like on a, 2, 3, or 4% down day.
Yeah, exactly. We would see a bigger candle and we would have seen some insane movement. Honestly, I thought maybe the FOMC minutes were going to actually get us there today, Mike, because we had that big event come out at 2 p.m. Eastern time. Now, I'm in Central, so on my chart, it's going to look like 1 p.m., but you can see that big red candle came in. Then we actually flew to the upside before going lower. And I know a lot of people are worried about like rate hikes and stuff like that going on right now, and it looks like the Fed members are kind of leaning more towards a rate hike here. I'm reading through this, and there's a lot of uncertainty ahead, of course, but a lot of them were saying that they wanted rate hikes. But, there was some talk about that rate hikes, if you do them too quickly, then obviously we get rates too high too soon, and that could be a problem. So there was some fear of that, but I was looking at a lot of the probabilities too, and it was just it was surprising to me. So the rate hike chance actually dropped, even though they're giving the headlines of that. Now, it actually went up a little bit for December, but overall, it actually dropped for the November meeting, which is the meeting I thought they were going to maybe raise rates at. But we're going to have to see how these percentages go, Mike, because getting better Fed insights is a very important thing for the markets.
Exactly. So, like, basically everyone's like, all right, it's nice to see inflation coming down a little bit, but, the job's not done yet. It's just not. Inflation's still a little bit too high. And everyone looks to, Jerome Powell or other important members of the Fed, and they're like, what are we all doing, right? Are we raising rates more, or are we going to keep them how they are? Or are we going to cut them, right? And when you look to the Fed for guidance, you would like to, have some certainty or, a little bit of confidence. And the Fed's just basically like, I don't know. I have no idea. It just depends, right? And everyone's like, well, come on. Like, what are we doing? So basically, that's the situation. There's a bunch of uncertainty, and it's like the people you should look to for certainty are basically like, I don't even know, man. Like, seriously, it just depends. So the market doesn't necessarily love that right now. And on top of that, this is where it gets a little bit scary. We have this other chart showing what the market normally does, given what we'll say whether we have a recession or we don't. So basically what we can see in like the black/dark green line is the market so far this year. And what we could see in the dotted line is what the market does, on average when there is no recession in the situation. But in the normal green line that Tom is about to highlight right now, you can see what the market does when there is a recession. What's very scary is the market right now is trading as if there will be no recession. There is a chance we see a recession, and if we do, on average, the market has a lot more room to drop. And even looking at the probabilities of a potential recession aren't necessarily too calming. We're seeing there's currently around a 66% chance of there being a recession in the next 12 months. Of course, it depends on what, metric you use, whether you're, calculating this based off the treasury spread or some analysts or whatever. There is a chance we see a recession. And even if we do have one, the market has a lot of room to fall, at least based off of these historical averages.
Yeah, and I mean, I cannot believe that there's a higher chance of a recession in the next 12 months than there was during 2020 whenever we actually had a recession. So I find that to be pretty crazy too, and I guess it kind of makes sense with how the Feds have been going. The rate hikes are supposed to kind of push us more and more towards that, and there's definitely a chance that that could happen. That is one of the coolest charts I've seen in a while though, Mike, is to kind of see that overall movement with the recession. If the market does end up going through a time of recessionary period here, we are going to see probably a bigger pullback towards that average down there, and maybe even get to the bottom. And that they do have the 10 to 90th percentile moves here too. I'm not saying we get all the way to the bottom, but there's always a chance if it's bad enough. But it's going to be crazy out there, Mike. It's going to be a crazy next few months, and ending this year and going into next year with everything the Feds have been doing. I hope that we don't fall off too hard, but in the short term, it's definitely good for those other plays like SQQQ, SPXS, and stuff like that. So there's always opportunities out there, even though these stocks are going down.
Exactly. I want to repeat that, Tom. There is always opportunity in the market, right? Yeah, we have a lot of stocks falling right now, but that's okay. Whether you're looking at SPXS, this moves up when the market falls. You have SQQQ, which also moves up when the market falls. You have UVXY, which pops up when there's like volatility increasing in the market. So like there's always opportunity, and it's just about, capitalizing off of that and being able to adapt. I've said this many times over the past couple videos, but if you treat the market the same way that you should have treated the market 5 months ago, you're going to be in for some trouble, because the market has changed, and the market is always changing, and it will always change in the future, right? You have to be able to adapt, and that's what makes truly successful traders, successful, and what helps them succeed over the long term. So, have an open mind going into the market. Each day is a new day. Have a positive attitude going in, and be able to adapt and understand that the market we're in right now is not the market that we've seen. And at least in the short term, there's been a lot more bearish movement than bullish movement. And you have to keep that in mind going forward. And it's also worth noting that the news hasn't necessarily been the best either.
Yeah, exactly. That news has been kind of rough. It seems like every time that there's something coming out, they're talking about like recessions and rate hikes, and they're putting out articles about like Jamie Dimon saying that saying that the economy is gonna go down and everything like that, or have a big downturn. So I feel like it's weird. Like, it's almost like the media is also kind of shifting, Mike. I don't know if they're kind of being adaptable, and kind of shifting because the market's starting to drop and they notice that, or if they're doing it to, some people contemplate that they, try to manipulate things a little bit. But all I know is that we can only look at it how it's played and how it comes to us. And looking at these stocks, they're starting to pull back hard. Like, look at Apple here, all the way down to 176, almost 175 right now. Like, if I would have told somebody 2 months ago that Apple was about to drop from $200 down to 175, they would have probably said I was nuts.
That's how it is, Tom. It's just how it is. Well, Tom, I think it's now time to crack into some of these plays for tomorrow. One stock I'm watching very closely is Netflix. And this stock sank a good amount today. It's coming up pretty close to this $411 level. Right now it's around like we'll call it 415. And 411 is going to be a decent support. There's also some support around 410. And then there's also support around 400. But, besides those few support levels, I think Netflix has a lot more room to fall.
Yeah, I do too. I mean, it looks like it's starting to fall off a cliff, and it's doing this with a bunch of other stocks too. The SPY's falling down, even like Apple, Nvidia, others are starting to fall down too. So I love this play, Mike, and I actually have a play to the downside just like this as well with Boeing. They're another one that's been very high recently, and they're down at a huge support at $230. Now, we've talked about this support actually yesterday as well. Both of my plays today are actually the same ones as yesterday because they just happen to do so well. Boeing with that downwards move, though, that 230 support's amazing. We talked about it on Bookmap, how there were a bunch of buyers coming in. At the end of day today, Boeing started to test that and kind of wiped out those buyers there. You can see how there was that big red line. If we actually zoom out on Bookmap, it's been there for a few days. But zooming back in, you can see how it got wiped out end of day. There was some coming in around like 229.50-ish, somewhere, or 229.20, somewhere right around there. But I will be watching this for a breakdown. That 230 support's huge, and it's always good to have the X-ray vision on your side, Mike, to see that those buyers are getting wiped out there.
You know it. So check out our friends at Bookmap. It's going to be that first link in the description and the comments down below. It's seriously like X-ray vision for stocks. And when you use the link down below, you also save because we do have some special offers on that link. So definitely check it out. But another stock I'm watching pretty closely is UVXY. Basically, this explodes when there's panic in the market. We are starting to see panic and selling pressure increase day by day. So I have some very close eyes on UVXY to the upside. There isn't necessarily like a specific resistance level I'm watching, but when you see the market like selling off with some decent momentum and volume and even news, this play can be pretty solid.
Yeah, exactly. Like you might even want to watch SPY, like if they break down under like 439 or SPY starts falling down with a lot of momentum, that'll be a really fun play to watch. And my next play is actually very similar with SPXS. Both of those stocks that we just mentioned go to the upside generally when the market's falling. SPXX follows SPY more specifically. It was up 2.32%. SQQQ is another one. They were up like 3% today, even more. But I'm really liking SPXS lately with all the downwards movement out of SPY. Again, there's no real set resistance because like you were mentioning, Mike, it's really just feeling out the momentum on these types of stocks. It's not necessarily saying like, well, hey, if SPXS breaks 1450, then it's to the upside. Those supports and resistances aren't as key as they are on like SPY or Boeing or an individual stock like that.
Exactly. Alrighty, well, with that being said, Tom, let's jump right into some of these momentum plays for tomorrow. With the first one, we have AMD to the downside.
Yeah, we've talked about this one a lot, and it gets back under $110, approaching support around 105. I will say, though, there was a lot of big wicks right here. So if we get under 106.50 tomorrow, watch for a push, watch 106, and then 105.50. I think if we get under 105.50, we could see an even larger sell-off, but I think it'll be a bigger, like, early morning type of move or, like, a bigger move coming in later in the day. I don't think it's going to be like a slow selling day tomorrow, Mike. I have a good feeling AMD specifically with the swings it had like this morning, it could really have a big move tomorrow.
There we go. Another one I'm watching, or another momentum play, I should say, is Google to the downside.
GOOGL, go ahead and make them break under 127.80, just below that like 128 support. I'm glad to see him breaking under there today.
And with the last one, we have the powerhouse Apple for both directions.
Yeah, got to do both directions with Apple always, but I will say they're starting to break out of that recent range, which is nice. So if they fall under 176 even, look at puts, maybe watch 175 a little bit under there, but I could see them going down quite a bit more if we break under 176. If we end up popping back above 178.50 to the upside, I think Apple could go up. But I will say though, Mike, there's no way I'm really leaning to the upside here tomorrow.
Alrighty, so we do have that upside level on Apple. If it breaks above that, we're watching it for calls. More importantly, we have the downside level. If it breaks below that, we're watching it for puts. And then don't forget about Google and AMD with their downside levels as well for puts. But it is now time for the big money $1.64 million trade of the day. And we are looking at IAU. This is basically another gold play, and someone dumped 1.64 million into the 34 strike call options that expire on October 20th of 2023. This is a bet that gold prices will go up. Just the other day, we had a pretty big money trade with GLD, so it looks like we have multiple different examples of the smart money betting that gold prices will rise. Yeah, I mean, it's good to see this. I'm going to have a very close eye on IAU going forward. Personally, I like the GLD play better, but at the end of the day, they're going to move basically in the same way.
Yeah, they really will. And one thing to keep in mind, guys, I know a lot of people today were talking about GLD and, they were like, hey, the big money play didn't work out, right? Like, that's terrible. But guys, this play was just entered recently. It expires in October. So keep that in mind. Even if gold goes down for a couple more days, it could start ripping back up, especially if like a bunch of fear starts hitting the markets. And I would say, Mike, the fear should start coming in sometime soon, given how much selling pressure we're starting to see here. I'm actually surprised that gold hasn't been holding up better than it has. I was actually surprised to see it go down the past couple days. It's kind of been blowing my mind how it's been falling with the market. Now, it does that sometimes, but I would have thought that people would be hedging a little bit more here.
Yeah, I agree in that sense for sure. But I guess I'll just reiterate the statement of give it time. Big money trades a lot of times in situations like this are not like day trades. They're not like, all right, I'm going to dump, $17 million into this call debit spread and I'm going to close it tomorrow. It's not really like that. A lot of times it's like, all right, I'm gonna hold this for a couple weeks or maybe even a couple months, and I might even roll it out in the future and re-enter with even more time. So give it time is what I would say. But either way, I'm gonna have a very close eye on IAU and GLD with these big money trades. But all in all, Tom, I am loving this market movement right now. I'm loving this downside selling pressure. We haven't seen movement like this in a while. It's made for a bunch of great opportunities to the downside, whether that be day trading put options, shorting stocks overall, or any other bearish play has really benefited from this recent market movement. And I'll tell you this, I'm loving it. So hopefully this movement keeps up. And with that being said, do you have any final thoughts?
Yeah, I mean, let's keep ending the week strong here. We have 2 days left. Let's kill it these next couple days, Thursday and Friday. I think that there's going to be a lot of opportunities, just like we've had all week long. The bots are doing pretty good, Mike. I've been loving those plays with them as well. They've been fire. And, we've been talking about SPY to the downside for a while. If you guys have been making any good moves or good plays off of these, throw them in the comments. I want to hear some good stories about some nice profits from some puts lately. And, we've been talking about this, Mike, literally since it fell out of the channel up here on August 1st. So I hate to say it, but we've been pretty bearish here lately, and it's been going pretty well except for all that choppiness that's been involved.
Yeah, exactly. Besides the chop, the market's been pretty solid lately. Those who have adapted in a quick way have definitely profited from it, but even if you didn't adapt quick enough, that's totally fine. A lot of times market cycles and changes take weeks or months to fully happen, right? So even if the past couple weeks have been slow for you or red for you, that's all right. Keep your head up high. Go into the market with a different attitude tomorrow and next week, and as the month progresses, and as long as you're willing to adapt and you have a decent strategy in place, of course, then you should do pretty fine. On the other hand, if you're just gambling some earnings plays and doing some crazy stuff with super far out of the money options, then it might be a different story. But all in all, this type of movement, this type of volatility that we're seeing, a lot of times is the best type of volatility and price action that you can see as a short-term trader, because a lot of times when the markets are in this sort of phase, as a lot of people like to say, the market likes to take the stairs up and the elevator down. That elevator type action, whether it's to the upside or the downside, normally makes for some insane moves, not only with stocks, but also options. So I'm pretty excited. You guys should be too. If you guys are new to the channel, subscribe to the channel. We post brand new videos all the time. And when you subscribe, you'll see our videos recommended to you more often. And besides that, guys, let's have an amazing rest of the week.